The latest move puts some major averages on track to finish this week higher. Here to discuss with me now, Jeff DeGraaf of Renaissance Macro Research. Welcome back. Look, man, I remember many of our conversations. You were looking for a move like this. You were more positive than most. What led you to be so, and where do we go from here, since you, like other technical strategists, are theoretically looking at the same charts?
Yeah, I think it's a combination of things, Scott. I mean, we tend to prioritize the factors that are important. One of the big ones for us was these real yields were at a level that was historically very overbought. And we thought that there was room in the bond market, particularly from positioning, for yields to soften. And because of the sensitivity that we've seen for equities to those yields here, particularly in the last 6 months, we thought that that was going to clear the way for a pretty good year-end rally that's consistent with the seasonal trends that have been in place since really the early 1900s. And we had a good oversold condition. So very few tops. It was, really a market that was trying to consolidate some of those gains that we had seen from July, when there was kind of this capitulation from the bears. We went into that third quarter and it was softer, but to us that really looked like it was just kind of a normal consolidation, setting up for a good year end. So far, so good.
Yeah, I mean, but aren't we now overbought? I mean, how quickly things change.
Yeah, we're not quite there yet, but what my concern is, we've had decent breadth days. I think today is about an 80%, 82% advancer day. That's not a bad number, but it's not a spectacular number either, right? The good news about this has been we've had several of these. We've had, I think this will be the fourth or fifth, kind of mid 80s in terms of breadth, which is a good sign. We like to see it a little higher than that. But you're right. I mean, we're going to get to 4,500, and I think we've got a real test on our hands because we're not seeing that broadness. And there's really two things I'm looking at. One is the all-world index, so the all-world index X the U.S., and that's weaker. That actually entered a downtrend back in the middle part of September. And then we look at the Russell microcap, and that's really been the laggard this year, and kind of stalling out. You want to see everything power through, and as we start to see these things diverge, then I think we start to get ourselves into some trouble with the overhead. I do think that we can get to 4,500 between now and the end of the year, particularly these mega caps helping, but that'll be my concern as we get into that Christmas time. Do we still have that kind of momentum, or are we overbought and starting to fade a little bit?
This idea of the breadth of the market needing to widen for a more healthy market, I think everybody would agree with that. The question is, it hasn't really mattered. It hasn't mattered to the overall trajectory of where we've gone from and where we are now. When does it matter? It's the question we asked at the very top of the program, and maybe it doesn't matter. I don't know. When will it?
Well, we've done some stats, and I won't go through all those because I don't want to put your viewers to sleep. But generally, when you have a breadth divergence, when the S&P is in an uptrend and breadth is in a downtrend, your returns are slightly below average. So that it's not a disaster. I know a lot of people think it has to be negative returns. It's not that bad. What you really need to do is you need to wait for the overall trend of the market to shift or change. That doesn't look like it's going to happen here. If we get into December, we fail at 4,500 and then come down, that's certainly a characteristic that we'd be looking for in terms of a trend change. But I think you want to focus on the trend of price, not the trend of breadth, because that tends to be the final arbiter. And that's kept you out of the fray. I agree with you 100%. I mean, people have been complaining about breadth all year long. We've just been looking at price trends and the internal momentum and saying, look, that might be a problem at some point, but let's wait for that point to really develop into the price trends themselves.
Speaking of price trends, the price trend on Disney has not been good, one day notwithstanding, obviously, after earnings. You suggested you'd sell that?
Yeah, look, we've got something we call optimal exits, and optimal exits are well-defined downtrends that are now overbought. And this is the classic definition of an optimal exit. American Tower, AMT, would be another one, got right to the 200-day moving average, and looks like it's running out of gas. So, there's a few of those names out in the marketplace here that still look like they're better for sale for us. And Disney certainly is a characteristic of an optimal exit here from our work.